Ladies and gentlemen, it's Hugh Hendry, the acid capitalist, welcoming you back again to the sunny island of St. Bart's in the French Caribbean. Today, I'm getting down with the Stereo MCs. And you know what? Something ain't right, I'm thinking, Marcus. And I'm gonna get myself connected. Because I ain't gonna go blind for the light which is reflected. And you know what? I'm going to do it again, because if you make sure you're connected, that the writing's on the wall, but if your mind is neglected, stumble, baby, you might fall. Oh, come back, H.H. Forgive me, I just love music lyrics. Yes, it's a beautiful day. Christmas is even coming. Santa Claus, sleigh bells, and palm trees on the beach. An incongruous trifecta. Oh, and the trade winds are blowing. Surprises? I've got plenty. The most expensive time in the year to visit St. Bart's. And the weather? Always unpredictable. Rain, wind. Of course, sunshine, loads of it. But for those overstressed, high-achieving visitors from the Northern Hemisphere, those sudden rainstorms, pure panic. Existentialist freaking out on their super yachts. Could I be setting you up for more market reflections, more tales of mayhem? You better believe it. Because perfection is dangerous, rarely achieved, and markets, my brothers and sisters, markets are bloody bonkers. Tesla's doubled since the election. Prices everywhere are soaring. Expectations sky high. People, I'd advise you to buckle up. Now hold that thought just for a moment, because I hope you're loving the show. Now I broadcast it on the Buzzsprout platform. Yeah, Buzzsprout. I've never heard of it either. But apparently they've got over 96 million monthly downloads. And you know what? The show ranks in their top 5% worldwide. Wow, hard to believe. I thank you all most kindly. And I urge you to leave more messages. If you don't like the public forum, send an email to me, Hugh, like Hugh Grant, Hugh Hefner, Hugh at acid.capital. Give me ideas for the show. What do you like? What do you dislike? What topics would you like me to explore? Now, some of you have asked me about the next summer camp in St. Bart's, and I'll soon be launching Camp 3. And next year, it's going to start 5th of May. So come for 3 to 5 days, bring a partner, learn, relax, and have some Caribbean summer fun. I assure you, you'll come as a stranger, but you will leave very definitely as a friend. Remember that email, hugh@acid.capital. Right, now, down to this week's business. US markets are closing the year, or they were, up 27%. Tesla, MicroStrategy, Bitcoin. I've mentioned them all. The trifecta of Trump's triumph, perhaps. But Bitcoin, the Bobby Digital, is grabbing all the headlines. But what's the big fuss? Maybe, this is what I think it's going to trade in line with the size of the gold market. Now that implies the stock trades. The stock is not a stock. That implies the price trading 8 times higher, closer to $1 million. Remember who forecast that? 13th of December, 2013. The very one, your only acid capitalist. But that's another $16 trillion of wealth, either invented from credit inflation or borrowed from the demise of others. But we're only talking about 3% of global wealth. Kinda doesn't seem a big deal. Now, the bigger drama resides with the stock market. Going back to my friends, those stereo MCs, a stumble there and we might fall, 'cause the writing's on the wall. Now today, I want to wade knee-deep into a tale, I want to say, which is typical of this year, because it's almost like a scene from The Great Gatsby, which seems appropriate as I continue to explore the similarities of today with the roaring 1920s, the last time of American exceptionalism. Now, I've got an LA confidential story of the do's and the do-nots of the social scene of West Hollywood. It's about karate kicks, missing panties, and the art of the unexpected. And of course, I'll swing back to the markets, because while money never sleeps, it damn sure gets weird. Okay. Now picture this, people. I'm in a legendary movie star's mansion, nestled in the hills above the Hollywood Strip. But here's what I remember from that strange evening. I remember a voice. "Excuse me, sir, but that's my seat." What? I whirl around, but I don't see anyone. Turns out it's a tiny, snot-nosed kid, no older than 7 or 8, and he's tugging at my baggy thrift store's pants. And he wants me to give up my seat. I mean, my seat, my chair. What the fuck? Now, I'm no philosopher, well, maybe just a little, but there's a fine line between humility and humiliation. And I can assure you, I wasn't crossing no line for no spoiled rich kid. But the thing is, I needed a refill, more tequila to while away the time. And on my return, the little son of a bitch has claimed my seat. Seems positively delighted with his coup. What to do? No worries, I've got 3 kids myself, so I've played this game many times. I pretend the seat's vacant and I sit down. Squash the little Oompa Boompa. Not a Glasgow kiss, per se, but near as damnedest. Let's just say I sent him a not-so-subtle message of where to go. And then, the inevitable, the dam bursts. Tears, sobbing, off he runs. Kids these days, no sense of humour. I think no more of it and continue scanning the room, flirting with some hot girlfriends. Except, just as I think the drama is over, she appears. Like a scene from Kill Bill, my Tarantino assassin. She strides in, white, mini tube skirt, preposterously high heels, a Nelly kind of lady. I smile, make eye contact, and she tosses me one steely look back. It was a Knickerbocker glory moment. And wham! She delivers a manifesto, as if served by Charlie's Angels. A thigh-high karate kick, ferocious with intent, but perfectly calibrated to stop an inch, a breathtaking inch, short of my chest. I think, and I take a sip of my tequila. I step forward and I embrace the lovely. I learnt that move years back on CNBC after disparaging some expert or another. I reckon it's better to hug your opponent, leave them confused, and diffuse the anger. But later, I'm dissecting what had happened with the girlfriends, and I learn of something that I completely missed, because she wasn't wearing panties. Bold. You see, it turns out my crime, it wasn't the kid. My crime was failing to genuflect at the altar of the lady's beauty. Respect, it turns out, isn't just demanded in the LA social scene, it's actually enforced. The prettiest dame at the ball, and I hadn't even glanced her way with an admiring nod of acid approval. Now, what does all of this have to do with markets? Nothing. But sometimes the market is that lady in the white miniskirt. It's confident, self-assured. It's strutting around in the glory of its 27% gains for the year. And just when you think this party's the best ever, it's endless, it delivers the kick, the unexpected, the jarring reset that leaves you breathless. So we're going to talk, ladies and gentlemen, about disentangling the mind from the infection of now, to imagining a time in the future, to leaving that party without a scratch. Because it's never obvious when the end is nigh. There's no perfect signal, no quantitative metric. It's more an intangible feeling, experience, intuition, that sort of hocus pocus. A sense of this can't last forever. About daring to conceive of the action, not today, but 18 months later. And with that, if you want, you know what? You can skip to the acid breath chapter, and I'll bid you farewell. Adieu. Farewell, my friends. Here's to living hopefully, dying bravely, to Nicholas karate kicks, and always expecting the unexpected. Now, if you're hanging around, merde, because what an asinine time to have to procrastinate on what happens next. People don't want bluster, they want conviction, but therein lies the rub, the uncertainty of tomorrow. I want to scream, sell everything, but I can't. Why? Maybe because I'm a weak man. But no, because every historic data point for US stocks, all those points, there's one argument, the consistent positive returns over the last 100 odd so years. Sometimes they're modest, sometimes they're enormous. Sometimes they're enormous, but it's hard to deny the fact. Returns are most likely to be modest for the next decade. 1 to 3% compound annual growth rate, if we're lucky. I mean, that's way down from what we're used to. But even then, the modest returns that I think are inevitable, they'll probably disguise a brutal correction, maybe several. This infestation of bullishness is going to linger longer in the market's reflexes. It's going to require shock therapy for its eradication. For instance, you think NVIDIA dies here? I mean, yeah, it's given back, lost its mojo. But I got to tell you, not a chance. Pavlov's dog, you know about the Pavlov thing, throw a dog a bone. That behavior, and you have pros, but I mean, that damn weekly option expiration market, and with volatility rising, people will be buying the lows, selling covered calls, I suspect, being long the stock, trying to harvest the income. It's not for me because, I mean, you are underwriting lofty levels. To me, these highs are a stubborn stain in the making. It's like spilling red wine on your white shag carpet. A lot of scrubbing before this is all done. Now, here's the thing. The margin for error, right now, right here, it's damn razor thin. Factually, stock valuations are high. Recent historic performance has been exceptionally good. And yet neither you nor I can exclude the possibility that US stocks surge even higher. The Fed, I'm doing this under a blanket. I'm doing it on, Wednesday night. And the Fed has just admitted that the health of the US economy means that rates are unlikely to be cut as much as expected in 2025. But what if the international disorder forces them to cut more? That they sacrifice the domestic agenda to save the world? We've seen that James Bond script before, and US stocks surge further I can't rule it out. It's not my central tendency. But reputations, they've been lost for less. Let's do a history tour. Consider the S&P 500. It's up 75% from its November 22 lows. I mentioned this last time. The parallels with the roaring 20s. The Dow Jones did nothing for over a decade, and then it doubled in 2 years from 1927. And then it crashed as money died. I think the modern monetary regime is going to die again, just like back then. Back then it was gold. This time, the world is held together by the US dollar and the US Treasury. I see bad things happening. Now, the S&P, oh my God, I'm too hot. I can't do this. Okay, I'm back. I had to take a break. I switched the AC off and the blanket over the head. I'm toasted. What was I saying? The S&P, yeah, it's up 75% from October 2022. Could it tack on another 25% next year? Next quarter, maybe? I mean, you bet. It's impossible to deny. Because nowhere else is as jiggy. Look at China. Gigantic attempts to propel their stock market higher. But no one is buying it except a few pros. Bond yields are collapsing into Japanese territory. China, a graveyard or a springboard higher. The world doesn't care because Elon's got the new president's ear. And the business leaders in America, they think we're going to get richer. Emerging markets, a complete waste of oxygen. High GDP growth, but insiders who sequester the gains long before you, the investor, sees a penny. Is it really a surprise that India's richest businessman is embroiled in scandal? No, it comes with the territory. Now, currencies, oh my God, currencies in South America and India are perilously weak. And I mean a reversal of 40 years of revival. The Indian rupee on course to half from its mid-2000 levels, despite paying massive interest rates for you to hold their paper. The EM, the Emerging Market Loyalty Card. Please, Mr. Investor, don't jettison our puny currency. Brazil, utter chaos. A perennial promise perpetually undelivered. The Brazilian president was literally losing his mind this week. But his surgeons claim they found a Lulu brain. I remain to be persuaded, as indeed do markets, where the stocks are sliding. And they're bank stocks. The bank stocks are the artery to an economy. There's blood. Bank stocks, the major stocks in Brazil, they are below and falling rapidly below their 2008 lows. Just think about that. Now, at the core, the central banks are cutting. The Swiss, the Canadians, the Europeans, all cutting rates very, very quickly. But it's on the margin. Brazil, as I said, rates up to 12.5. Russia, 23%. Remember those fools who were talking about buying the Russian ruble? Yeah, Barney ruble more like. Nigeria, it's a big economy in Africa. 19.5% rates. Pakistan, trouble with the stand. 23%. North, I was going to say macadamia. I can think of macadamia nuts more rapidly than the Central Bank of the Republic of North Macedonia. And they hiked rates to 6%. Rate hikes despite woeful economic stagnation. Flight capital at the airport. Destination, get me the hell out of here. Again, the echoes of the late 1920s. A global capital chasing US equity outperformance. The world tilting on its axis and the money rushing into the States. And then it crashed. Fast forward 50 years. It's 1980 and the S&P, in real terms, it was trading at half that 1929 high. Or fast forward another 12 years. We're 1992. I'm in Edinburgh, a very young analyst, and I'm pleading with my senior portfolio managers to buy America. Why? US allocations back then were just a paltry 3%. Fast forward 30 years again, like today, and they're more like 65%. Nicholas kicks, one might conclude. The things we don't see, the prejudice of the now, that's the trap. Focusing on the immediacy of investing. Few amongst us can imagine just 18 months ahead. I mean, we can, but we're lazy. Never mind trying to estimate where we'll be in 30 years' time. I've been guilty of this myself. In late 2008, engulfed in the banking turmoil, after the demise of Lehman et al., I was proclaiming to my investors, I was proclaiming loyalty to US long bonds at 2.4% yields, the lowest in 50 years. But fast forward 18 months, and those damn yields were 4%. I was talking nonsense. The now, a seductive mistress, the perpetual malady of investment. Oh my God, call the fire brigade. I'm positively wilting under the blanket. Today, US stocks are up 60 times since 1980. Yeah, it was a low base. S&P was 100. Today it's 6,000. But no one makes the connection. I think it's got everything to do with China's 1994 currency peg. Before their peg, US stocks had quadrupled in 14 years. That sounded about right. But the relentless treasury buying by the Chinese for the best part of 30 years, no fundamentals, a sovereign, the Chinese sovereign, intent only on pursuing a domestic agenda, a huge non-market mechanism in the FX market. Did it fundamentally shift risk pricing in the US? Probably. That's my take. Completely turned macroeconomics on its head. Because nothing in the macro world has made sense ever since. Macroeconomics died in 1994. The stock market, that S&P, it moved from 400 to 6,000. And that's 1994 to today. That's 30 years. That's 10% compound annual growth in price. You probably had another 4% in carry in the dividend yield and share buybacks. That's almost like 15. That's doubling every 5 years. That is preposterous. That is the malign influence of introducing a non-market discipline into the world's largest FX arena. But now I want to ask you, is change afoot? The same goons who haven't seen it, of course, they don't see it now. Yes, China's economic policies are failing. Yes, deflation looms for them. Their annual M2, the money supply growth, is the lowest in decades. I think the last reading, 6% expansion. But who amongst us can imagine a currency devaluation of the Chinese renminbi? Because they haven't bought treasuries for almost a decade. Wasted their money, of course, on building a new Silk Road through Africa. Sovereign defaults. And of course, they financed the preposterous property bubble across mainland China. But now, rather than buy US treasuries, they're buying Chinese state-backed bonds. Maybe they're going to allow the markets to set the external price of their economy, the exchange rate. Maybe it's no longer going to be controlled by the Chinese Communist Party. Maybe their focus has switched because it's all about domestic asset prices moving forward, not external. They want domestic prices higher, and they're going to print red cabbage, baby. And the yuan or the renminbi, the exchange rate, I don't think they could care less. It's cheap, it's undervalued versus their outstanding trade performance. The old macro model says, left to its own devices, it probably trades higher. But the heretic says, it's going to trade much lower. 740 is the barrier, and it's a mere whiff away. But we test it tomorrow when you're listening to this. Let's see. Nine red cabbage to buy $1. That might be the new handle. But just what would that infer? I've often commented on the analogy with Mad Max, a deflation horror story. That's what I've warned. But it all depends on whether cheaper import prices from China boost real disposable incomes for the US consumer. And it depends on whether the Chinese household could snag some real wage gains. And would we finally fill the glut of overcapacity? Like I say, it really all depends on its impact on global consumption. And it's complicated. In the US, consumers, they might see cheaper imports. I say might. And that would boost their disposable real incomes. That would be a net positive. Except it's not so easy because tariffs. Would consumers actually witness lower prices? Would they see a deflation in the price index of US imports? Because the political will is to deny this. So tariffs, they might circumvent the boost to incomes. The other factor is jobs. Now, in the absence of tariffs, if US-based manufacturers can't compete with the renminbi at 9, then it seems likely job losses would result, and that's not good for the household and spending. But of course, tariffs again might stymie this drag if price deflation from imports is not allowed. If it's taxed by the tariff, then the jobs remain, but the real disposable income of the household sector, the gains, well, they seem non-existent. And the plight of the Chinese household? Inflation in the cost of imports brought into China, that ain't good, but more jobs or higher pay, the bonus from a weaker currency and all that money printing for supporting asset prices. Would that be good? Or would other nations, they wouldn't be happy at further loss of jobs from importing Chinese devalued goods? Like the kid in my chair, is Europe crossing a line into humility or humiliation? I doubt it's going to end well. So I still see a Mad Max landscape, but I see a denouement, a final reckoning. I see the US coming to reject the gig. I see the death of the present money regime. Again, everything points to 1929. And if this prophecy were to come true, it seems so unlikely. But hey, I'm a provocateur. But maybe we see a final swoon lower in US bond yields. I have been so wrong on TLT. Before macroeconomics makes sense again, maybe we see yields to the 10-year at 2 or less. Do we see Fed funds below 2 before the end of next year? With the whole mess overseas, I'm not betting against. I'm tempted to bet in favour. And Stan Druckenmiller, the legend, would he be proven right? He prophesizes. I'm using that word a lot. He sees bond yields trading at nominal GDP growth. Now, that just didn't work with the Chinese as a non-market player setting the rate. But if they've gone AWOL, maybe Stan's going to be right after all. I just think we see 2 before we see 8. I mean, I'm making these fingers up. Fingers? I've got fingers. I've got 5 on each hand, I promise. Anyway, I just think we need a reality check. Now, before ending, I wanted to present BHP, the mining giant. I mean, why not? But I think it can serve as a stark example of what happens when the music stops, when a once dominant force loses momentum and drifts. What might that say about US equities? Could the mighty S&P follow a similar fate, drifting while the world struggles to find a new balance? This is why I urge caution. History teaches that even the strongest market narratives, China's infrastructure boom, US exceptionalism, the copper boost from electric vehicles and the greenification of the world, eventually they all run out of steam. And all we're left with is the grind, the stagnation, the BHP story perhaps. Because that stock had an incredible run during the 2000s. It rode China's massive infrastructure boom from a market miner, and also ran in the 1980s. By the 2000s, the stock had risen tenfold, 20 times, 30 times, pushing its market capitalization to 300 billion. For a moment, it felt unstoppable, one of the biggest stocks in the world. The others, a lot of Chinese companies, God, that gives me the giggles, Chinese banks rather, and mobile phone companies. I mean, why do we resist the urge to consider change when it's the only constant? But here's the thing, BHP is barely moved in the 16 years since it peaked in the noughties. It's a third lower than its all-time high. It's stuck in purgatory. It's pedaling backwards. Periodic 50% bear markets have become the norm. Maybe that huge super China cycle has run its course. Impossible, the hard money guys insist. Men in suits, are they dreaming of electric sheep? My friends, are today's exuberant gains setting us up for tomorrow's long, frustrating wait? These are the questions I ponder as I stare out at the blue azure horizon from my desk, nestled in the sand. Investing, I remind you, it's not about now. It's about what comes next. And what comes next, I suspect, it won't be as easy or as clear as today's optimism suggests. And that's why, despite my reservations, or maybe because of my reservations, what am I talking about? The heat, the blanket, no AC, St. Bart's. I've got the willies. I've got the giggles. I've got the willies for equities. They positively terrify me. Expect the unexpected, because when the party ends, and it surely will, the kick will leave you breathless. Here's to living hopefully, dying bravely, and embracing the KKK, the Nicholas Karate Kick. Boom. Now, my goodness, I've got to breathe. Let's find time to contemplate, to chill on the market's reaction to the Federal Reserve's interest rate decision on Wednesday, the 18th of December. Let me help you. I hope you're sat comfortably. They say it's important that your back is straight and upright. I don't know. Normally, I just lie in bed. I'm not trying to force anything. My eyes, they say your eyes should be open. But my eyes are wide shut. And I'm taking some deep breaths in through the nose, out through the mouth. So I hope your chest is expanding. And as the breath passes through your mouth, the muscles soften. The stress is being released. And with the next exhalation, let's just allow your breath to return to its natural rhythm. And if your eyes are open, please close your eyes. Come on, I dare you. And here's the cool thing. Can you feel the weight of your body pressing down? Can you feel the gravity? The energy that's always there, but we're simply not conscious of it? I want you to relax. I'm sure you can hear sounds. Let them pass. Let them go. Don't pay attention to them. Notice them by all means, but let them pass. And as your attention returns to your complex body, notice how are you sad? Or are you lying there happy? How does your body feel right now? Tired? Or do you have a sensation of lightness? The Unbearable Lightness of Beings, a great book by Milan Kundera. If you're like me, you've probably got some restlessness in the body, some twitches, pangs. But without trying to change anything, just be curious. And it sounds like a science fiction movie, but let's do the body scanner. Starting at the top of your head and moving down through your body, searching out your feet with that curiosity to discover how your body feels right now. And now let's shift that attention back to the wonders of our breath and its movement. A movement, a Swiss clock, is always there in our body. Just where do you feel these undulations, these rising peaks and troughs of the breath within you? We're searching the sea of tranquility. I promise you, it's close. Can you feel it? Some form of rhythm? Where is your breath? Is it irregular? I certainly hope not. Is it short, shallow, or is it deep and profound? At this moment, only you can tell the secrets of your eternal echo chamber. And now, pursuing this infinite journey of the breath, I just call upon you to stay focused on the breathing. Have you got, I can hear it, I can hear thoughts invading your mind. That's cool. Just let them go. Focus on the breath. Focus on the breath. Still, allow those thoughts, those invaders. Let them come. Let them go. But gently, my friends. Just bring ever so slowly your attention back to the breath. In and out. Don't force it. Just let it be. Noise is everywhere. But where are you? Well, let it go. Now, no more focusing on the breath. It's getting boring. Let that attention go as well. Let it all hang out. Go on, let your mind run riot. Let it focus on anything. Okay, my friends, come on, wait it in. Let's bring it back. Attention. The body. Where's your body? Again, feel the majesty of the weight of your body pressing down. Your hands, your legs, your arms. Come on, people. Let's wake up. Let's be aware of the space, the sounds, the smells. Do you feel the sensations? A new beginning, a stirring? I don't know. But if you're ready, I beseech you to open your eyes. You have officially completed an acid capitalist magic carpet ride. Your grey matter is ready for the challenges that await. Be curious, be playful, be mischievous. Until the next time, the acid capitalist bids you goodbye.